What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is NFLX Netflix. This finishes at $202 today. That is up 5.61%. And in the aftermarket here, this is currently running up to $215, which is about 13%. So we haven't discussed Netflix in a while here. Last time we talked about it was during the last earnings, where this got absolutely wrecked. Netflix predicted that they would lose 2 million subscribers. A lot of investors were unhappy about that. But today, the stock did really good. And that is because the new earnings came out. So this is brand new. These numbers just came out. Let's take a look here. So EPS was $3.20, which beat the estimate of $2.96, and revenue was $7.97 billion, which missed the estimate of $8.04 billion. So the earnings were pretty average. Nothing too crazy. EPS beat, revenue miss. But the big news here is that total subscribers only went down 970,000, as opposed to the 2 million that Netflix warned us of initially. So that's still not really great, but a lot better than what most people expected. So I guess that is bullish. They say that they're going to roll out different tiers of their accounts starting next year. So there's going to be a cheaper option with ads. And they say they are starting to crack down on password sharing, like they said they would. So yeah, the earnings weren't too crazy, but I think a lot of people are very happy due to the sub count not being as bad as originally anticipated. So great day today for the stock and mooning in the aftermarket here. All right, let's jump right in. Let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 163, and there can be multiple possible tops. It can be 226, 246, 352, or 397, and longer term this is part of an even bigger cup and handle where this has the potential to go all the way back up to 701, the all-time high. So those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we do have a triple gap down. First gap down is back at 566, so that's a bullish indicator. That is telling us that the stock should come back up to 566 to fill this gap. Second gap down is back at 507, so another bullish indicator. That is telling us that the stock should come back up to 507 to fill this gap. And third gap down is back at 333. So another bullish indicator that is telling us that the stock should come back up to 333 to fill this gap. And it may take a while, but eventually in the long term, those gaps should fill. Down here on the MACD, the moving average convergence divergence, the MACD line is starting to pull away from the signal line. So that's a bullish indicator that is telling us that it may be time to buy. In the aftermarket here, this is running up to 215, so that is a bullish indicator for tomorrow. That is suggesting that tomorrow the stock will run to the upside as well. And here we did have a triple bottom form. Here's the first bottom. Here's the second bottom. This was the third bottom. So that's a bullish indicator. That is telling us that the stock may break out to the upside, which it appears like it is doing right now. So the triple bottom is bullish, but at the same time, we are getting a double top that is starting to form now. Here's the first top, and the second top starting to form here. So that's a bearish indicator. That is suggesting that the stock may break out to the downside. And it hasn't formed yet, but if this aftermarket action holds, there's going to be a new gap up created tomorrow at 202. So that's a bearish indicator that is telling us that the stock should come back down to 202 to fill that gap that will be created tomorrow. And right now, we do have a symmetrical triangle forming here. This is currently consolidating between 204 and 181. So there's a bit more consolidation to go, but this should consolidate somewhere around 194. And from there, it could break out to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 205 and 201. So if this goes to the upside, next levels of resistance would be 205, 212, 221, 226, 246, 253, 263, 271, 277, 284, 295, 305, 314, 323, 330, 336, 344, 352, 360, 367, 375, 379, 385, 391, 397, and then 414. There is resistance above 414, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 201, 197, 192, 190, 186, 181, 176, 170, and then the yearly low of 163. So right now at the current price, 202, the channels to the upside are very wide. So if the stock continues to run to the upside, expect a significant increase in price action. And to the downside, the channels are normal sized. So if the stock runs to the downside, expect a normal amount of price action. RSI is currently at 60, and it definitely will be higher tomorrow. So that's not quite overbought and overvalued, but above average there. So according to the RSI, the current price of 202 should be a little bit lower. And this did 26.5 million in volume today, which is way above the average of 6.5 million. So this pump today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So it's been pretty rough for the stock lately, the past half year. It went down over 75% from the high. But this is Netflix, a very blue chip value stock. It's not going anywhere. So eventually, this will have its day again. And it does appear like it may have bottomed out and is starting to reverse here. So long term, this is definitely a good stock to buy and hold. In the short term, this has been very bullish, but I do think this is due for some pullback. So therefore, if you want to go long, not financial advice. You missed some pretty big upside today, but that's okay. Please don't FOMO. Again, there will be a new gap up created tomorrow at 202. So I do expect this to pull back down to 202 before it runs to the upside again. And honestly, 202 isn't exactly the greatest entry. Pretty average entry there, but in the long term, it should pay off pretty big. Again, there is a gap down at 567. The stock should eventually come back up there. So from 202 up to 567, that would be over a 180% upside potential. So a huge upside potential here in the long term, especially for a blue chip value stock like this. So I can't support going long at 202. And if it pulls back, then you can just average down at the supports that I mentioned before. But it honestly shouldn't really go too much lower. This is near the yearly low, very strong support. So I would say going long at 202 would be a medium risk, very high reward play. Definitely worth a shot in my opinion. Can't really go too wrong buying in at 202 and holding for the long term. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend that. It's definitely a really bad idea, shorting this for any extended period of time. Again, huge upside potential, and really not too much downside potential. So if you want to go short, it would definitely have to be a quick scalp. And even that is kind of risky, but you should be able to make some pretty quick money here on the short side. So again, this should fill the gap at 202, which will be created tomorrow. And from the current price of 216 down to 202, that would be about a 6.5% downside potential here. So not much downside potential. I would say going short here would be a very high risk, low reward play. So it's really not even worth it in my opinion. There are definitely way better short plays out there in the market, and Netflix is not one of them right now. So if you want to go short, please do that at your own risk. Get in, get your money, and get out real quick. All right, so pretty straightforward, guys. It's been a really rough half year for this stock. Went down 75% from the high. But here today, we got some pretty good earnings, excellent news. Long term, it looks really bullish. Short term, it looks bullish as well, although this is probably due for some pullback. So if you want to go long, I think you missed a lot of upside already. And if you're a little patient here, you should be able to get this back at 202. The gap should fill there. And from 202, there's huge upside potential in the long term. So I can't support going long at 202 and lower. And if you want to go short, that would be extremely dangerous, but you should be able to make about 6.5%, shorting at the current price 216 and covering at 202 where the gap is. But it would definitely have to be a quick scalp. You don't want to have a short position open for an extended period of time. So if you want to go short, please do that at your own risk. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is NFLX, Netflix. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.